Ted Weisberg is a veteran Wall Street trader and president of Seaport Securities. He's seen these rallies and these falls come and go. He joins us now from the New York Stock Exchange. Good to talk to you, Ted. Thanks for joining us.
No, it's my pleasure. Thanks for having me.
Well, you've seen them before. You've seen the falls and you've seen the rises. What similarities or what differences can you see with this particular situation?
Well, I mean, there are, which is usually the case, so many moving parts at the moment. Certainly, today's action was extremely volatile. The market was up 200, down 200. We had the Fed announcement, which initially was viewed by equity traders as bearish. Market sold off about 200 points. Then the bonds rallied very strongly. I think the equity traders who had probably sold the Fed announcement short quickly reversed positions, started to cover those shorts, which fueled a rally, and we ended up closing up on the absolute highs of the day, up 429 points, which was slightly more than 5% on very good volume. I'm not sure that we can attach or anything other than technical to today's rally. But clearly it was a relief after 11 or 12 days of almost going straight down.
It would be a great relief, but I guess what hasn't changed and what the Fed Reserve statement has guaranteed is that your economy, the US economy, is still in a really poor state. There's not much the market can do with that.
No, I would agree. I mean, up 400 points is nice. Probably technical from a dramatically oversold position.
Yeah.
But you're right. The Fed announcement today, I personally thought was very bearish. Kind of like trying to put lipstick on a pig, if you will. I mean, the fact that I've never heard them make a projection like they made today for interest rates, that they basically would do nothing into the middle of 2013. I think that was highly unusual. And there was really nothing positive in their statement. And then if you back up and you go to the sovereign debt downgrade by Standard & Poor's, the weak GDP number of a week and a half ago and the revised weak GDP number, the problems in the Eurozone, the whole embarrassment and what seems to be a dysfunctional politicians in Washington and dealing with our own economic problems, the high unemployment, the very weak housing market, and on and on and on. You know, it's very hard to make a positive case for the stock market. It's amazing, in fact, even after the sell-off, that the market perhaps is trading where it is.
Is this a political problem or an economic problem, or are they really one and the same thing now?
Yeah, well, I think I would call that a chicken and an egg problem.
Yeah.
What comes first? I think we have a big political problem. I don't want to get too over-focused on the politics, but it's awful hard. It's awful hard to have any kind of reasonably serious discussion about the economic problems in the U.S. without connecting the dots to the politicians in Washington. It just seems as if that the Obama administration is always on the defensive. They're always reacting. For whatever reasons, they can't seem to get ahead of the curve. And I think that sends a very negative message to investors. It certainly doesn't inspire a whole lot of confidence now 18 to 20 months into his administration. And even his speech yesterday, I mean, I guess his constituents like what he says, but the fact is, it's just the same message over and over again without really any solutions. You know, it's a good campaign speech, but it's not a speech filled with solutions or giving us any direction. So I think that a lot of the problems at the moment are, in fact, political. I mean, there's a confidence problem here. The good news, and there is always some good news, the good news is that the Standard & Poor's 500 reporting period for the second quarter more than 70% of the companies that have reported so far, which is the vast majority of them, have exceeded earnings expectations and in many cases exceeded their revenue expectations. And their balance sheets are flush. Yeah. So corporate America, in fact, is in very good shape. And at the end of the day, it is going to be corporate profits that ultimately will determine and drive the stock market. But unfortunately, there's this very anemic U.S. economy. I'm not suggesting that we're looking at a double-dip recession, but there's no question that the economy just continues to struggle, and it has to be the result of what appears to be misguided economic policies, both from the Fed, the Treasury, and the White House.
Ted Weisberg, really good to talk to you this morning. Good luck.
Thank you.